Welcome to the Building Web3 podcast. Today we dive into the $312 billion reinsurance market with Cliff, co-founder of Re.xyz. We're going to discover how Re is transforming reinsurance with Web3 technology, ensuring transparency, eliminating fraud, and tokenizing investments on the Avalanche blockchain. Now remember, nothing stated is financial advice. Building Web3 podcast. Today we have my good friend Cliff here. He's the co-founder of a very exciting company called Re. Cliff, could you give us a brief background into what you were doing before you started Re?
Sure, Jax. Hey, nice to meet you. Thanks for having me on. So I've been in the software development business since about 2003. And that's everything from high-speed websites like ImageShack to cybersecurity projects like Excellion, where I built a data protection private cloud appliance that is installed in the U.S. government and large industries worldwide, where I served as a chief technology officer. So building software, leading teams, and now co-founding companies on blockchain is how we got here today.
You had this large technology background, and eventually you came into the Web3 space. What was kind of your come to crypto moment?
So it was really the realization that the industry that we were in needed more transparency and more access to the data when it leaves the user's hands. Meaning, if somebody has an insurance policy or an insurer is trying to report on some of the information around that policy, it needs to be observable and provable to all parties involved. And when we started to look at that, we ran an insurtech company previous to founding Re. We started to realize that there was an opportunity to not only change an entire industry, but improve it at multiple levels. And we started with the whole paradigm that data can be completely visible to everybody, not just behind a walled garden of a specific insurance company, but open to the entire world. Now, that does come with a few caveats. We obviously can't publish personal information on blockchain, but the performance and the amount of information, and certainly the promise to pay a particular policy, can all be exchanged on the chain, as well as simplifying the integration between carriers and the transfer of information when you're trying to report on information at the individual level, all the way back to the reinsurance level. The integration and the efficiency of doing that on the blockchain is orders of magnitude better than if you would have done that via customized or bespoke APIs that are different amongst every party involved.
Absolutely. And before we get too deep into Re and its mission, let's talk a little bit about the insurance market in general, because a lot of my listeners will be founders, developers, marketers, all in the Web3 space, and they might be like, insurance, I don't know much about this. So could you give me like a high level overview of kind of like how insurance currently works, and then how Re is kind of approaching this problem in a new way?
Sure. So it's not just insurance, it's reinsurance. So Re started as what's called a collateralized reinsurer. And reinsurance in general is insurance for insurance companies, meaning that an insurance company provides you an insurance policy, let's say to drive your car, right? You're not going to drive your car without an insurance policy. So you go and you buy a policy from an insurer. That insurer is required to keep a certain amount of collateral in the bank in order to pay any kind of losses that you might incur over the time period that you're engaged with that insurer. Multiply that across all of the policyholders that the insurer is doing business with, and it turns out that they have to keep quite a bit of capital on the books in order to satisfy the regulations that the regulatory capital that they need to keep in the bank to sell those to service those policies and the losses that potentially could arise. So what they do is they buy reinsurance. They pass some of the obligation and the risk onto another party, in this case a reinsurer, that holds that capital, puts it up in a bank, and promises to pay the insurer when one of those losses comes in. And that's what Re is. We provide that backing that allows that relieves some of the risk and capital obligation to an insurer by putting that capital up for them in exchange for a portion of the premiums at the end of the day.
Got it. So if anyone's following along, I'll say how I understand it, and you can correct me where I feel wrong. So people buy maybe an insurance policy on their house in Florida. Then not only does the insurance company insure that property, but the insurance company then gets insurance from a reinsurer to ensure that if a giant hurricane comes by, that they're also not obliterated. So it's kind of a passing of the risk obligation to a tertiary party.
That's a great way to think about it. That's right. They're passing some of the risk on to another party.
Got it. So now that we understand kind of the insurance space plus the reinsurance space, let's talk a little bit about what Re does and its mission and how it's kind of improving upon that current reinsurance landscape.
Sure. So Re in itself is a reinsurance entity. So we went and got a license on the Cayman Islands. We are now able to write reinsurance anywhere in the world that will take our collateral as credit for reinsurance. Right now, we're selling reinsurance in the United States. We're putting that capital up, and we're earning premium on it to the tune of about $80 million in total premium that we've written to date. Now, our mission is to memorialize the premiums of the insurers that we engage with on chain, so that that's provable to the parties involved, the investors, the insurance companies themselves, any kind of auditor, and certainly the regulator, as to what contracts we're involved with, what policies the insurers themselves are selling, what are the losses on those policies, and at the end of the day, is there enough collateral in the accounts to back the amount of business being done. So by moving this on chain, any of the parties involved can immediately observe the performance of these treaties, the performance of the policies underlying them, and they don't have to go and ask for permission. They don't have to do an integration. None of that has to happen. So streamlining and putting the infrastructure on chain was the initial mission. The second part of the mission is to federate access to underwriting new treaties. We're a very small team, only about 10 people. We've been able to grow this business by partnering with smaller groups of qualified underwriters and actuaries that can bring us business, evaluate it, underwrite it, and then on our paper and using our collateral, service that business. So we don't need to build a giant team of underwriters and actuaries in order to build a huge book of business. We can partner with smaller kind of franchises of these underwriters, and we call them syndicates. So they're going to bring in the business. They do all of the heavy lifting in exchange for a commission on the business that they write, and then they leverage our infrastructure to service and run that book of business itself. So that's the second layer of the business. The last layer is to tokenize and give access to the DeFi world and the greater investment world to an opportunity to benefit from this new business that we've put on chain and tokenized the investment into by allowing people to invest and participate in some of that risk in exchange for a portion of the premiums at the end of the day. So there's infrastructure, there's underwriting and evaluation, and then there's the investment layer that sits underneath that. And so moving all of that on chain allows us to do all of that. And we're doing it piecemeal. We can't boil the ocean and move an entire industry overnight. So we're stepping through this piece by piece. And we have recently announced our tokenized investment fund, and we'll talk about that in a little bit. But we are making headways on each of these efforts individually.
Got it. So it seems like there's an infrastructure layer. There's then the federated model for the underwriters. They're actually finding the insurance policies to underwrite and then using your infrastructure with which to, I guess, store it, put it on chain. And then there's the tokenized aspect where we'll now be opening up these, call them like reinsurance investment vehicles, like these investment opportunities to
That's right.
the public. Got it. So
Correct.
let's talk about the progress that you're making in those particular buckets. So is something like the infrastructure piece moving more rapidly, or is it the select group of underwriters?
So we're actually making progress on all of these initiatives kind of at once, right? So the first thing that we did was build out infrastructure that normalizes all of the data that comes into the system, right? So we do business with many different insurers, and they all record and report on data in different ways. So the first thing that we did was, instead of asking them to conform to our standards and record this information on chain, we went ahead and did it for them. So we built an automated system that brings all of that data in and standardizes what we expect as far as the contract, so we can put the contract on chain, and then standardized all the information that they're sending us so that we can kind of sanitize it of anything that's identifiable inside of it, and then put that on chain itself. So the infrastructure piece we made great strides on over the last year and a half, and that's all going to be running up and running for the purposes of underwriting against the investment itself very soon. So that 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 was a huge achievement for us, and it wasn't an easy task. The second piece is federating the underwriting and evaluation of all of these deals. And we do have several of these syndicates up and running today, and they've brought us all of the business to date. And that's what got us to that $80 million in gross written premium over the last year and a half across, I think it's 18 different treaties that we've signed up. The treaty is a reinsurance contract itself. So we've proved out that model, and we plan on scaling that out horizontally as well over time. And then the last piece is the tokenized investment fund that I just talked about. So we now have up and running, and your users can go and onboard onto the site through re.xyz and become a member. But they'll go to a site called Securitize that manages our tokenized investment right now. They'll be asked to provide a certain amount of KYC information. If they're in the United States, they'll be required to prove accreditation, and they'll be allowed to make a deposit and participate in the reinsurance risk itself. And where we were very innovative is the fact that we created an investment instrument that allows that fund to be connected to the reinsurance risk itself. So we've had our first investment into that fund, and soon to have our second. That cash is now being put to work in the reinsurance company, and those investors are holding the investment token that represents that risk and their rights to the profits.
There are the three layers of this. One is the infrastructure layer, and in the past, because you guys are bringing this to market, it seems like in the past there may have been issues where there wasn't very transparent data, or people might not have been able to see, specific coverages. Was data transparency a big issue in the reinsurance market?
Absolutely. And you can look back as recent as about a year ago when the market was incredibly upset by fraud in the market. And fraud is in the way of misrepresenting the amount of or the availability of collateral to back an insurance policy. So when you're talking about an insurance company that needs hundreds of millions of dollars in collateral to back its policy holders, it's relying on the reinsurance company to pay that or have access to it when the claims finally come due. And in the news about a year ago, there was a big upset in the reinsurance world when a reinsurance company was backing insurers in the way of a letter of credit that would have represented that hundreds of millions in reinsurance. And when the day came to pay out the claims, it turned out that the backing of that letter of credit simply wasn't there. The whole letter of credit was fraudulently fronted. And if this would have been on chain, that simply wouldn't have happened. And so the ability to avoid situations like that and cut the fraud out of the representation of cash availability, we think is industry changing. I mean, that's huge. It simply wouldn't happen anymore.
Yeah, absolutely. And because this is so industry changing, I've talked to people in the financial space who also talk about, Larry Fink even said everything will come on chain eventually. Do you see that you guys are kind of ushering in a new era for the reinsurance market, and that other companies will be following suit, or is it largely just you in the space?
We think that people are going to come into the market and push things on chain eventually. Everything should go on chain at some point. It's a matter of when. And a lot of these companies have been around for 100 plus years, right? So changing something that has been working for 100 years and doing something as revolutionary as moving the infrastructure and the representation of those investments on chain is a huge investment. People have tried to move large swaths of the market's infrastructure on chain. And, in our opinion, it was just too much all at once. You have to stepwise your way into something like this. And when success begets success, well, we think that more and more of the market will start to move on chain. However, having a head start is always a good thing, and having a good relationship and approval from a regulator like our partners on Cayman with SEMA is a really good thing if you're looking at first movers advantage.
Absolutely, and a huge advantage to be first to market. Now, let's talk a little bit about, I'm not as familiar with the reinsurance market, but I assume there's a specific vertical that you guys maybe target. Maybe it's real estate, maybe it's, I don't know, boats, many things to possibly have insurance and reinsurance on. Is there a specific vertical that you see this taking off with more initially, or is it general policies across the board?
So, we write reinsurance in many different verticals, many different industries. It's more about what matches our strategy. So our general strategy is to write low volatility, short duration, predictable risk, right? So those are things that are not catastrophic risk. So right now, we're not doing hurricanes or earthquakes, things that have a very binary outcome, whereas a house can be blown over and the entire insurance backing for that might be wiped out. That's not within our current strategy. So we're doing things more like small, medium business without bars or taverns being included, commercial auto, workers' compensation. We back a whole fleet of tow truck operators. So these are the sorts of risks that we're undertaking now. And as far as geographies, one of the things that we're looking at is diversifying across geographies. So we might write, a portion in the Midwest if a particular type of policy becomes available for us to back. And then if the market turns a little hard in that area, we'll start to turn our sights to another geography. But you want to avoid putting all your eggs in one basket, because just like diversifying an investment portfolio, you need to diversify your reinsurance portfolio in the same way to avoid concentrated risk in one area, one type of risk, one industry, or one time, right? Time is another vector of diversification that we look at. And over time, we don't write all of the business all at once because, inflation is a factor. The market economy will change over time. And just like you would possibly dollar cost average an investment portfolio or diversify, we do the same thing when we're looking at the different types of risk and the different diversification strategies that we're going to implement.
We talked about 3 different areas that you guys were working on. We talked about the infrastructure piece. We talked about the syndicate of underwriters. And then we talked about the portion where people could invest alongside in more of the DeFi space. Historically, were people able to invest in reinsurance companies or like reinsurance, vehicles? Or is this pretty much a new paradigm being introduced to like retail investors?
So typically they have not been able to invest directly into a reinsurance risk, specifically as we're making it available right now. They've been able to buy particularly something called a cat bond, which is exposure to catastrophic risk, and that comes along with a certain return profile, but it's very different from the type of risk that we're making available to them. You could also buy stock in a reinsurance company, but that comes with a whole other suite of issues when you're investing in an entire company as opposed to a particular risk itself. We're making available a basket of reinsurance risks without any of the administrative overhead, and giving people potentially the option to choose the types of risks that they want to be included in. In the beginning, we're offering the full basket of risk across everything that we write that falls into the strategy of low risk, low volatility, short duration program business. But eventually we'll start to expand the options that we give our investors and allow them to choose maybe something that's more risky and falls more into the return profile that they're looking at for their particular investment. But right now, it's more like you think about it as an ETF across all of the risks that we take, and you're trusting us according to the strategy that we've been approved to write reinsurance in.
Got it. So not to think of it like a fixed income asset. It's not like something like a bond. It's more, tied to the value of the underlying, I want to say pool, but underlying policy and the premiums that you guys are collecting, correct?
That's right. It's more of a direct connection there. And, we've been very successful in achieving the underwriting loss ratio. When you judge a reinsurance company, you judge it on something called a loss ratio, and lower is better in that situation. And typically, the reinsurance companies are in somewhere in the 90s, where they get to keep whatever's left above the number. So 92, you'd keep 8%. We've been sitting in the low 90s, high 80s in the business that we've written so far, and that's really, really commendable. And we're really proud of that fact over the first year and a half and the first year of treaties that we've written.
Absolutely. Well, we're wishing you guys all the success. So Web3 is a very new, paradigm, very new technology stack. Have you guys encountered a lot of challenges building your platform, and how did you work to overcome them?
Well, certainly in the beginning, when we were trying to move all of the performance information and standardize how all of this information would end up on chain, and this isn't the Web3 problem specifically, but whenever you're trying to get a lot of people to agree on what kind of information to send you and how it should look and what do you want to be able to report on out of it, especially across many different companies with different goals and abilities, that's just a hard problem right out of the gate. And then you talk about putting it on chain. You're opening up, you build a Web2 infrastructure, and then now you attach a Web3 infrastructure, and there's a whole other suite of at least topics to consider, like how much gas are you going to spend for these transactions? Who's going to pay for them? What chain are you going to use? Are people going to be, who's going to be able to observe it? Do you need to put some privacy in place? Because like we talked about in the beginning, everyone has access to this information. So those were a whole slew of the issues in the beginning. And then there's also the form factor. We have to understand that a lot of the businesses that we're interfacing with and a lot of our partners aren't necessarily going to want to become Web3 fluent. But we want to give them the advantages of the business moving on chain. So we have to figure out that bridge between the two. We have to build something that's taking advantage of the blockchain technology that we're building everything on, but still making it accessible enough for our partners to be able to participate and reap the benefits of.
So technology-wise, I assume you had to build like some standard APIs for people to submit, requests to, and then that would allow you guys to put all of that data on chain. Is there a specific blockchain you guys use? And let's talk about some of the technical infrastructure.
Sure. So we started off by committing to Avalanche for all of our internal infrastructure. And not only is it extremely fast, the transaction rate is low, right? But it's cheap as far as cost per transaction, especially when you're talking about building infrastructure on it. And then there's their team, which has been extremely supportive from the very beginning. And so those three reasons those were the three reasons that we chose to go with their infrastructure in terms of how we're memorializing all of these treaties on chain. They are making strides into bringing a lot of the institutionals on chain. So, you probably read the headlines about the different institutions that are adopting Avalanche as a blockchain. And, that's just fuel for our fire in terms of people being able to trust the type of blockchain that we're going to put all of this data on in the future. And we see it as a plus for the entire community.
So let's talk a little bit about, some of the more difficult aspects of building a company, because, my goal is to have more founders be building in Web3, kind of bring a billion people on chain. So what are some of the more difficult aspects of building a company in general, a startup that you built? Do you find it to be marketing? Do you find it to be product development, finding a really good problem and building like an offer that people want to buy into?
Sure. So, when you start a company, and I run the engineering aspect of so I have a specific focus as a co-founder. But anytime you build something from scratch with your co-founders, everyone wears a lot of hats. and you're making something happen that didn't exist before. And you're in this case, we're tying two worlds together, Web 2 and Web 3, that don't necessarily have an obvious bridge between the two. So you're building a brand new product in an industry that isn't necessarily forthcoming with a lot of information, meaning the reinsurance company. You're tying that to the blockchain um, in a way that maybe the industry thinks it should happen, but nobody has done it before. So you're doing something completely new. So doing all of the product research, technical due diligence over how that should happen, and doing that in a fast enough amount of time to where you can put something together and have a product, or at least a machine that can start making money and prove out your concept, the thing that you set out to do fast enough is the biggest thing that you need to figure out. In our situation, we were fortunate because we were able to start writing business before the product was actually built, and then we were able to start layering it on. So it was kind of a confluence of a perfect situation for us at that time because we were able to start making money quickly and then start optimizing by layering on the technology as we went. And then we were able to start bringing people into that federated underwriting world and eventually start layering in the investment aspect of it as well. But you kind of have to be able to divide up the buckets of what's absolutely necessary to run a business. Do you have a really good understanding of the pieces of how that business works and what pieces are going to make it run? And then how can you get that up and running as fast as possible?
Absolutely. And you guys are in this bucket of real world asset startups. Would you say you guys are working a lot with other real world assets? There's people bringing carbon credits on chain. There are people bringing gold bars on chain. Or do you find yourself largely like kind of in a space of your own? Or do you think there's a lot of collaboration amongst this real world asset bucket?
I think there's going to be an incredible amount of collaboration in this space. The real world asset space is a multi-trillion-dollar space that's so far been really untapped by the crypto and blockchain market. Right? So allowing the greater crypto ecosystem to participate in investing in and connecting their crypto assets with something in the real world and benefiting from its increase in value or its performance is good for the entire community. And in reinsurance, the reinsurance policy itself is only as good as the underlying collateral. So the more kind of assets that we can bring underneath the umbrella of reinsurance that are accepted as very good collateral and help people earn yield off of that collateral, the better, right? So if it's a tokenized treasury that somebody can put up as collateral and hold a token that represents their stake or their claim to the profits that were generated on that collateral, or if it's a bar of gold that ends up being represented on chain. It happens both ways. It's not only the participation in backing something in the real world, but it's the ability to use real world assets as collateral and stake that against a protocol that would allow somebody to earn yield on something that's otherwise kind of a static asset.
Yeah, it's a very, very exciting opportunity. Can you share some of the I'm sure you guys talked about the Avalanche partnership, how you've been able to collaborate with that team. Can you talk about some notable partnerships or collaborations you guys have formed in order to build your company?
Right. So the biggest one recently is our partnership with Nexus Mutual. So they're a DAO, a mutual that sells or gives access, provides a marketplace for blockchain security products. So you can go to their platform and buy coverage for your smart contracts in exchange for ETH in terms of premium. They have a large treasury of Ethereum, and they were able to pass a proposal that allowed them to make an investment into our tokenized fund. Right. So not only did we partner with another mutual in the insurance space, but we were also able to get approved by the regulators an investment into our tokenized fund by a DAO, which we feel like is groundbreaking and innovative in itself. And it provided a huge amount of backing for the amount of reinsurance that we're going to be able to write and put to work immediately.
Absolutely. And that's a very exciting that like DAOs and now reinsurance, and it feels very cool to see so many things taking place. Are there any really exciting use cases or like kind of applications of that you'd really like to highlight that the audience should know about? So we talked about you guys are doing reinsurance policies for like the smaller business. Do you feel like you guys are going to be expanding? Are there any kind of just solutions you really want to highlight?
Well, we talked a little bit earlier about catastrophic risk and how we're not participating in risks like that. But eventually, we would like to offer some kind of isolated pool of risk that people could participate in that's directed solely at maybe a specific type of hurricane or a hurricane in a specific geographic region. That would be very exciting to a specific type of investor because the returns would be high. The risk would be much higher, but the returns would be a lot higher, and it's more it's a better fit for people that are willing to take more risk, right? So the other thing that we're going to do is start writing business around the globe, right? So far we've only written business in the United States, and that in itself, while we can geographically diversify amongst the states, it does provide a little bit of concentration risk for us. And we realize that the need for reinsurance spreads around the entire world. So we intend to offer this service in all geographies eventually.
Absolutely. And, I think the audience will be very interested in where can they find out more about where can they, connect with you guys online and just see all of the exciting use cases you guys are going to be developing over the next like 6 to 12 months.
Right. So re.xyz is the website that they would go to. All of the information is there. They can get involved as a member where they'd be forwarded to the platform to make an investment by clicking on the member link that's right there on the front. And it's a very self-serve process, but we're available on Twitter. We have a Discord group now where we're interacting with our members, and certainly the email group is a great way to stay informed. There's an email list that's right at the bottom of the website there.
Perfect. Well, I'll put all the links in the bio. Please go collaborate with Online, go join the Discord, go check out the email list, and learn all about this amazing company and all the things that they're doing. Thank you again for listening to another episode of Building Web3. Let's get more people building in this space.